These are 8 top big cap stocks with large percentage gains today. Our review on STTK. Shattuck Labs Incorporated is a biotechnology company making strides in the development of treatments for inflammatory and immune-mediated diseases. Its lead product candidate, SL-325, is a monoclonal antibody targeting the DR3 protein, which plays a key role in inflammatory responses. By blocking the interaction between DR3 and its ligand TL1A, Shattuck aims to curb excessive immune responses that contribute to diseases like inflammatory bowel disease. Alongside SL-325, the company is also extended to developing bispecific antibodies, which could further expand treatment options for patients suffering from these conditions. Now, let's dive into the stock's recent performance. Shattuck Labs saw an impressive 77% jump in its stock price today, with a significant 3.4 million shares traded. The stock even broke out by 30% near the end of regular hours, which is no small feat for a biotech company. This spike is likely driven by growing investor confidence in the company's clinical pipeline, particularly its lead drug SL-325, which has the potential to revolutionize treatment for immune-related diseases. The biotech sector can be unpredictable, though, and stock movements like this are often fueled by speculation, so investors need to tread carefully. The large share volume indicates that there's a lot of activity and interest in Shattuck right now. A 77% increase in one day suggests that the market is optimistic about the company's prospects, perhaps due to the anticipation of future data from clinical trials or positive news surrounding regulatory approvals. However, it's important to note that Shattuck Labs is still in the early stages of its clinical trials, with SL-325 currently in Phase 1. While a promising pipeline and strong initial data can drive stock prices up, biotech stocks are notoriously volatile, and the path to approval is rarely a straight line. From a stock analysis perspective, today's breakout could signal increased investor confidence in Shattuck's potential, but it also brings risk. Any news that delays or disrupts clinical trials could lead to sharp corrections in the stock price. The biotech space is known for its volatility. Successes can result in exponential gains, but setbacks can cause rapid declines. Investors will want to keep a close eye on the company's trial results, as well as any partnerships or collaborations that may come into play in the near future. Given Shattuck's focus on immune-mediated diseases, there's a lot of upside if its treatments prove effective, but that success is still a big if. Overall, today's surge in stock price is definitely a positive sign. But for those considering entering or holding the stock, it's critical to remember the inherent risks of investing in early-stage biotech companies. If the clinical trials continue to show promise, the stock could see even more upside in the future. However, caution is necessary, and investors should closely monitor the company's progress in the coming months to gauge whether this upward momentum can be sustained. Our review on ARTV. Artiva Biotherapeutics Incorporated is a clinical-stage biotech company focused on harnessing the power of natural killer, NK, cells to treat autoimmune diseases and cancers. What sets Artiva apart is its approach of using allogeneic NK cells, meaning they come from donors rather than the patient's own body. These cells are pre-manufactured, cryopreserved, and ready to be shipped for treatment. Their lead candidate, AlloNK, is currently being tested in combination with B-cell targeted monoclonal antibodies, mAbs, for diseases like lupus nephritis, rheumatoid arthritis, and various cancers. Now, let's talk about the stock's performance today. Artiva saw a huge 35% jump in its stock price, with a massive 70% breakout right at the market open. That's a pretty significant spike, and it's likely due to positive sentiment surrounding their ongoing Phase I/IB trial of AlloNK. The combination of NK cell therapy with monoclonal antibodies could be a game-changer for treating tough autoimmune diseases and cancers, which explains the investor enthusiasm. Biotech stocks like Artiva can be highly volatile, though. A 70% breakout this early in the day typically indicates strong market excitement, possibly sparked by promising trial data, a potential partnership, or even a positive analyst update. It's important to remember that while such a rapid increase is exciting, it can also be a bit of a double-edged sword. Biotech stocks are known for their high risk, and clinical stage companies are often susceptible to sharp price corrections if trials don't meet expectations or if there's any news that raises doubt about their progress. Today's surge is definitely a sign that investors are feeling optimistic about Artiva's pipeline, particularly the potential of ALLO-NK. If the phase I/IB trial continues to show positive results, this stock could see even more upside, but there's always that inherent risk when you're dealing with clinical trials. For anyone looking at Artiva, it's important to keep an eye on the results of those trials and any upcoming news that could impact the company's development timeline. Right now, though, it looks like there's some serious momentum behind this stock. Our review on STRO. Sutro Biopharma Incorporated is a biotech company that's working on some really exciting stuff in cancer treatment. They focus on developing targeted therapies called antibody-drug conjugates, ADCs, which are essentially a way to deliver cancer drugs right to the cancer cells, minimizing damage to healthy tissue. Their main product right now is STRO 002 or luveltamab tazevibulin, yes, quite a mouthful, which targets the folate receptor alpha, FRGE, found in cancers like ovarian cancer. They're also testing it for some tough pediatric cancers, like leukemia. Now, let's talk about what's going on with their stock today. Sutro saw a massive 32% jump in its price, with a solid 25% breakout right after the market opened. That's a pretty big move, and it's clear something got investors excited. It's likely related to their pipeline, especially STRO 002, which seems to be getting attention. With ADCs becoming more important in cancer treatments, this could really set Sutro apart if their product moves forward successfully. But here's the thing. While today's stock surge is definitely exciting, it's still a clinical stage company, meaning there's a lot of work left to do. Biotech stocks are known for their volatility because they're often riding on the outcomes of clinical trials. So, while the market's optimistic right now, the real test is going to be how their trials pan out in the coming months. That said, if Sutro's products keep showing promise, there's potential for big rewards here. But like with any biotech company, there's a good amount of risk involved, and we'll have to see if those clinical trials get them closer to bringing their treatments to market. For now, though, investors are definitely excited, and today's breakout shows that there's a lot of faith in Sutro's future. Keep an eye on this one, because things could keep moving fast depending on the next trial results. Our review on LGPS. LogProstyle Inc. is a Japan-based company that's involved in a variety of real estate-related businesses. They focus on things like real estate renovation, where they buy old condo units, gut them, and rebuild the interiors to make them more appealing. They're also into real estate development, building residential condos and hotels with a blend of modern and traditional Japanese designs. Plus, they're involved in hotel and restaurant management, with a special focus on managing ryokan hotels in places like Tokyo, Yokohama, and Okinawa. Now, looking at the stock today, LogProstyle's up 32%, which is a solid gain, especially considering that only 164,000 shares were traded. And to make things even more interesting, we saw a 25% breakout right at market open. That's a pretty big move for a company that doesn't usually see massive volume. So, what's going on? Well, a jump like this could be driven by some positive business news, like a new project launch or maybe strong earnings results, but with only 164,000 shares traded, it's hard to say definitively. It's also possible that investors are just catching on to the company's potential, especially with their unique blend of real estate renovation and traditional hotel management in Japan, which has a lot of cultural appeal. One thing to keep in mind with a stock like this is that while it's seeing some significant movement today, it's also on lower than usual trading volume, so the volatility could be higher than normal. We'll need to watch and see if this momentum can hold up, or if it's just a short-term spike. But, for now, the 32% jump shows there's a lot of investor interest, and people are watching closely to see where this goes next. Our review on FRGE. Forge Global Holdings Incorporated is in the business of providing technology and infrastructure for private market participants. Essentially, they've built a platform, called the Forge Marketplace, that connects buyers looking to invest in private companies with sellers of company shares. This makes it easier for investors to get into the private market and for companies to access liquidity and capital formation. On top of that, they offer a suite of data services that provide key insights into a market that's often pretty opaque, which adds even more value to their platform. Today, we're seeing FRGE Global up 26%, which is a pretty strong move for a company in this space. The private market can be tricky to navigate, but FRGE's ability to bridge the gap between buyers and sellers, along with the data and custodial services they provide, seems to be gaining traction. This jump could be due to a number of factors, perhaps some new partnerships or an uptick in demand for their marketplace services, or even just more confidence in the private market as a whole. What's interesting about this stock is that it's tied to a growing trend of democratizing private investments, which is becoming more popular as investors look for opportunities outside of the public markets. So, with this 26% spike today, it's clear that there's some serious interest in what FRGE is doing. It's worth keeping an eye on to see if this momentum can continue or if it's just a short-term surge. Either way, this kind of jump is a positive sign for the company, and investors are definitely paying attention. Our review on ATPC. Agape ATP Corporation is a Malaysia-based investment holding company that's really focused on health and wellness. They offer a variety of products, including supplements aimed at boosting cell metabolism, detoxifying the body, improving blood circulation, and anti-aging. Their programs, like the ATP Zeta Health Program, Energetique, and Bonique, target different aspects of overall health, from dealing with environmental pollutants to addressing genetic variations through nutrigenomics. So, they're really all about improving overall well-being with a mix of supplements and wellness services. Now, today, Agape ATP saw a pretty impressive jump, up 26%, with a 25% breakout early in regular hours. That's definitely a noticeable surge for a company in this space. It could be due to a number of factors, maybe a new product launch or an uptick in interest around health and wellness as people focus more on improving their lifestyles. The health space is always evolving, and when you combine that with their unique approach, which includes both traditional health supplements and a more cutting-edge focus on gene expressions, it could be sparking interest from investors. This spike in stock price could be signaling that more people are starting to see the value in what Agape ATP is offering, especially as more consumers prioritize health. It's worth keeping an eye on whether this momentum continues. There's definitely a lot of potential if the company keeps making strides in the wellness space. For now, this is one to watch, especially if you're into health and wellness-focused investments. Our review on ANRO. Alto Neuroscience Incorporated is a clinical-stage biopharmaceutical company that's taking a really interesting approach to psychiatry. They're focused on redefining how we treat mental health by using neurobiology to create personalized treatments. By harnessing a platform they call precision psychiatry, which combines neurocognitive assessments, EEG, and wearable devices, they're aiming to identify brain-based biomarkers. These biomarkers help them figure out which patients are more likely to respond to their treatments, which is a pretty innovative way to tackle mental health issues like depression and schizophrenia. Now, on to today's big news. Alto saw a 25% jump in its stock price. That's no small feat, especially in the biopharma world. It could be driven by a couple of things, perhaps some positive data coming out of their ongoing clinical trials, or maybe the market's just waking up to the potential of their approach to personalized mental health care. Their pipeline is packed with promising candidates, including Alto 100, Alto 202, Alto 300, Alto 101, and Alto 203, all targeting major mental health conditions with the backing of data-driven, biomarker-based insights. This kind of jump in stock price usually signals investor excitement, especially when it's tied to clinical-stage companies with a solid pipeline and data to back it up. If Alto continues to make progress with its treatments, it could be setting the stage for even more growth. It's definitely one to keep an eye on, especially as mental health continues to be a growing focus in healthcare. Our review on USAR. USA Rare Earth Incorporated is making some serious moves in the rare earth metal space. The company is all about securing the supply of critical materials, especially those used in technologies like electric vehicles, defense systems, wind power, and robotics. They're developing a major NdFeB magnet manufacturing plant in Stillwater, Oklahoma, which is a huge step in building up domestic rare earth production in the U.S. The company is also working on its own supply chain for these materials, including extraction and processing, so they're not just relying on third parties. Today, the stock saw a pretty solid 25% jump. That's definitely noteworthy, especially in a market like this. The surge could be a reaction to growing interest in rare earths, especially as industries like electric vehicles and renewable energy continue to boom. USA Rare Earth's vertically integrated approach is really positioning them well in a market that's all about secure, sustainable supply chains, something that's becoming increasingly important given the global demand for these materials. If they keep pushing forward with their manufacturing plans and grow their supply capabilities, this could be a company to watch as demand for critical minerals and magnets only continues to rise. Please subscribe, give the video a like, and watch more from our playlist. Thanks.